Hi there, folks. Mauro here again. Um, just been doing some work during the weekend, looking at different feeds. I like to look at different feeds from the ones that I usually look at from time to time. Helps me out figure out better price action. Like to look at different charting software, different views, if you will. But anyways. Um, I want to share with you a couple of opportunities that I probably figured out. The first one is a bullish. It's a buy, even though the market has been very bearish, as you probably can see it. But yeah, I think I do see an opportunity to go long, probably with less risk. But the idea started from looking back in time and looking at this. Sorry about that. I went too much. Looking at this order block right over here. Um, this blue order block. Let me try to make it better. Yeah, this blue order block that sits right here. Um, as you, I don't know if you can see it, but market made a pretty strong move up when it left this particular level, um, and it never came back. Actually, it only went higher. So um, the idea that I have is, let me try to zoom this in so you probably can see it better. Yeah, there you go, much better. But anyways, the idea comes from having this support resistance level, and while price was stopped whenever it came back to this level, um, um, probably a long order wouldn't be too much of a bad idea. So I wanna go back and zoom in to our current levels. Let me reset the scale. And we're going to drop to the 4-hour time frame at first. So you can see that price made a nice rejection here, which is actually seen. This is a fractal on daily. Let me just show you on daily. Probably didn't see it, but this level is a fractal low on daily, and also obviously on the 4-hour. Pretty significant low, I think, was made here. And then an attempt to break lower was made, but if you remember, I just showed you the order block, that old order block, just held price momentarily. We don't know how weaker the euro is going to be, or how stronger the dollar is going to be. But anyways, looking at price action at the moment, price made an attempt to go lower. It probably riptide a turtle soup entry could have been made um, here on the 4-hour time frame, and this is a nice pattern because it made a low here, and then it made a high, here. Then it made a lower low and attempt to go lower, lower low. Then it changed the market structure once again when it made a higher high. So the idea is to buy somewhere here when it makes a higher low, somewhere higher low. So as you guys can see, this is a pretty much we can call this a reflection pattern. but with a very convenient local market structure, where we could obviously try and take a long, even though the long time bias is very bearish. Having this in mind, we're gonna take a look now at the. Let me get this out of the way. We're gonna look at the hourly time frame. We just dropped to the hourly time frame. Yeah. Let me try to zoom out a little, scale this out. There you go, perfect. As you guys can see, the 1.2570 level is also the top of this order block, this bearish candle prior to the move up. Within this support resistance level. So as you guys can see, this is the candle I'm talking about. As you guys can see, very interesting level, and pretty much matches the support resistance level we're talking about. So I think it's a nice confluent levels, and we're just gonna throw in the fib so that we can have an even better idea if there's any other confluence or not. Just make this better. Yeah, so pretty much the 79 retracement level is really close to the support resistance level, very close to the order block. I think it'd be a nice idea to take a long order in the vicinity of the 79 retracement level inside the order block. Place the stops below this low right over here. Let me just see how much this low is. Yeah, this low sits around 125.42. Yeah, so we could be talking about somewhat 30 watt pip stops, 30 some pips, the stop loss level. Yeah, and I think it's a nice pattern for a long. I think there's a lot of things building in that probably the risk is worth it. Probably less risk, but I'm certainly gonna be trading this pattern. Also, as you probably can see, there are swing lows throughout the way down. So there's a lot of stops, pockets sitting below this lows, sell stops below this lows for the longs issued at these different levels. So taking out all these previous lows would be very nice. Very nice. If I were a bank, I would do it. And obviously, we have to think as banks. Yeah, it would be a nice idea to draw in as many sell orders in the opposite direction of my intended direction. So yeah, looks like a pretty game situation for me, to me right now. Probably a nice trade opportunity to be taken. So let's move on to the other opportunity. Let me just get this out of the way, and we'll move on. Okay, let's go back to the daily time frame, and we're gonna zoom in a little bit. Just this. Let me settle the scale. Set scale. Yep, there you go. Perfect. as you probably can see, the 128.16 is the 128 level actually is a nice support resistance level. If you look in the past, yeah, I'm gonna do this now. See if I can do it for you guys. Try to show you um, the 128 level, or even the 128.16 level. Therefore, has been a nice support level in the past. Price wasn't quite able to break it in the past, and even if you throw in the line chart, you can see here, 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 again here, and here, and yeah, it's a very important level, I would say, from the past. Um, and if we consider this and the following things that I'm going to be showing you guys, let me zoom in a little more. Yeah, that's way better. Just reset the scale. Yeah, there you go. As you guys can see, this this move down, this convincing move down of bearish bars, bearish move down. This is the bullish candle right before the drop. So this is an order block sitting right over here. Very clear, at least to me, together with the support resistance level. And if we throw in the fib, we're gonna be finding out a very interesting situation here. As you probably can see, make it even more perfect. Yeah, something like that. But the 128.16 and the 79 retracement level, they pretty much match up. Even though we have this candle, even though you have this candle that made it to the sweet spot. This candle went all the way to the high 127.91, so pretty close to 128. But it didn't quite make it to the order block. I've checked a few feeds, and this order block wasn't quite hit. Therefore, I'll guess that a few buy stops would be sitting here. So if price makes it up here, I guess we're gonna be seeing probably another leg down. Right now, it's, as I've mentioned, it's a struggle. It's not quite a currency war yet, but there is a struggle between the dollar, an obvious struggle between dollar and the euro. The U.S. government does not want the dollar to gain in value as fast as it has been gaining, simply because too much of a strong dollar would probably do more harm than good. If you come to think about it, for instance, in exports, if you have an expensive dollar, it makes American produced goods more expensive, so exports would be hit. So therefore, and also in Europe, excuse me, the European Central Bank wants a weaker euro for obvious reasons. Also, so pretty much there's a currency war, pretty much. Not a currency war, but there's a struggle between these two currencies at the moment, and we could see a sideways market for some time. Also, that's a possibility because last week we had on Wednesday the FOMC minutes, and the market, the U.S. dollar took a hit. Then the following day, Mario Draghi came in, and all the euro gains were erased, pretty much erased, uh, and some. So yeah, we could be looking at a sideways market for some time because of this. But eventually one of the sides will have to give, and I think honestly, I think the euro has more fat to give away, if you will. So I'd reckon to see the euro lose value more rapidly than the U.S. dollar would gain value. If that makes sense to you guys. But anyways, this is just a thought at the moment. But looking at the chart, um, the 28-20 level seems to be a nice entry level. Again, first we're gonna probably see if everything goes as expected. We should see a bullish movement from the previous trade I just mentioned, and then a move up towards this level. Obviously, anything can happen in this market, but we work with order blocks, we work with patterns, we work with price action. So this is what I'm seeing at the moment, and yep, looks promising. All right, guys. I'll see you guys later. Probably we'll come back with some more analysis on the Swissy, the Japanese yen, and everything I could put my hands on. All right. I'll see you guys later. Bye bye.